Hello, everyone. How are you doing? It's been quite a while, but we finally have shit to talk about. It has been a long time since we've been able to do this. So, medical properties today, this is a REIT that has been beaten up like an insane amount. Finally had their earnings call after they announced Steward is no longer paying rent. Now, spoiler, the earning call actually beat estimates, surprisingly. Where is it? They were expecting. I don't think they actually go over that. Regardless, I'm very surprised how well everything actually went. Now, going forward, it was very hit or miss. So for the year, a net loss of $1.11, normalized funds from operation of 36. Oh, sorry, fourth quarter. And then normal FFO of $1.56. So you might be looking at this and being like, well, Ken, that's way lower than what's, MPW said it was going to be. The reason for that, and it says literally right here, all on a per share, included in NFFO is 12 cents per share of revenue from Steward Healthcare, recognized prior to moving to cash basis accounting January. So this means in Q4, they collected, as they said in their earning call, 25% of their rent and a little bit of loan payments from Steward, which in turn it was the full amount, and then in January they got 25%, they said. So it's not even remotely close to what they're supposed to, get back. But that explains why it's way higher than it's supposedly. Now, the dividend, I really want to bring that up because if you're like me, you're looking at this being like, dude, if they can sustain this dividend, that's pretty much a no-brainer going forward right now. Now, saying that, they did say in the earning call they are gonna go into a meeting later this month and they're going to talk with all the board members, and they're going to discuss the dividend for about a decent amount of time, I imagine. This hints to me two things is going to happen. Another dividend cut, bringing it down to 50%, which, if they cut the dividend, I don't know what's going to happen to the share price because everything's already priced in. I have no idea even why it's up, the 5.5%. But if they cut the dividend, here, we can do this right now. Let's say you buy it here. Again, this is all assuming it's in a TFSA. It is 15 cents. We are going to divide it by 2. So it's going to be 75 cents a quarter minus 15%. So it's going to be 6,375 times 4. You're going to get 25 cents a quarter. That's really not that much. But if we take that divided by, let's say it runs up to $4. I don't even have to do that actually. That was a 6.375% yield, which is really not that impressive. Now, if they're able to sustain it, you're getting $12.75 a quarter, divided by 4. So you're getting about a 12.75% yield if you buy at the stock price at $4. Because they said that, and, I'm looking at this and I'm like, I like the value play, but dude, it has so much to recover. I'm in no rush to buy this thing at all. And again, they could even come in and be like, hey, dividend suspended. I'm sorry, a lot of people don't own or don't want to hold REITs that don't pay a dividend. That's not really what they're known for. So, saying that, there's still issues they have to figure out, specifically around the dividend, and all that stuff. So, when they announce the dividend, I have a feeling they're going to do exactly what they did about half a year ago now, 6 months, where they came out and said, well, our new strategic strategy is a sustainable payout ratio and to leave efficient funds to do XYZ with, which, surprise, is very likely going to mean another dividend cut of, I'm assuming, 50 to 45%. Assuming. Now, with that said, in the earning call, they are continuing to sell property. Shouldn't be that big of a concern, but there is no update in Steward. Zero update on Steward. Basically, they said we're just gonna see how it goes. We're either gonna a new tenant is gonna come in, or they're like, we're gonna have to do something with the property. Very likely sell it. And then they're still selling properties like crazy. Prospect, which was the other tenant they had, which was pretty bad financial issues, they said is now in the clear. It's okay now going forward. Steward is the only issue as of right now. So keep that in mind. Now, if you want to buy this for, let's say, the long term play, again, you're buying a risky company that has a very long history of nonstop issues. We're talking the CEO blatantly hiding, lying, all that fun stuff. You're focusing on from as of right now, a very unreliable, risky dividend that could get cut literally next month. So if you're gonna be like me, you're literally gonna like look at this thing, be like, the NAV is still around like $15. So if this thing went bankrupt, that's actually the best case scenario, but there's no chance it's going to go bankrupt. Because they still have enough cash flow, they have enough cash in the book, they're still selling property, to pay off debt and stuff, so they're still focusing on all that fun stuff. But saying that, please, 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 please do not buy this with the idea that you're going to just run in here, make a ton of money, and be able to run out. This is what it says right here. So, but we're set relatively to our $2 billion targets. Wait, was this one? This one was... Sorry guys, I'm just quickly reading this. As such, we remain disciplined and optimistic in our ability to continue to execute transactions on attractive terms, and we feel good about where we stand. The board will meet later this quarter to discuss the dividend. That's what I was talking about. So they're like literally that. The board's policy on the dividend remains unchanged, as has always been the case. The board will review all aspects of the company, including items such as FFO payout ratios, REIT requirements, and liquidity before I turn over the call. I want to provide a brief update in Steward and Prospect. So this is what it goes. Unfortunately, since this time, Steward's cash collective challenges have become more pronounced, and the resulting changes to vendor payment terms that put pressure on supplies, constraining the ability to perform high-margin surgeries that are a key driver of cash flow. So basically, they don't have enough money to perform their big cash flow business, and without the cash flow business, they can't pay rent or anything. So basically, it's like a two-sided issue that's really bad. Prospect? Where was Prospect? Right here. Steward paid approximately 25% of all rent and interest owed. So, again, still not the best. Yeah, Prospect's EBITDARM has improved year over year, driven by increased admin volumes, higher Medi-Cal reimbursement rates, and lower supply costs. We're encouraged by the most recent December trailing 12-month rent coverage, which was above 1 times, aka they can meet the requirement, but, above 1 time could be, 1.01, where they're barely breaking even. To ship today on the sale, Prospect's 3 hospitals to Yale, as a reminder, our $2 billion of target liquidity transaction does not include this expected transaction or the expected recovery of our investment in Prospect. So again, if they can get recovery from Prospect, basically all the back loan and stuff that they owe, none of this stuff includes that, which would be really good. So, as detailed in our press release this morning, we have moved Steward and Prospect to cash basis accounting and divide our portfolio into 2 categories. So that's something if you guys want to go check it out later. That's really it. So TLDR, should you buy Steward, medical properties? I would wait to hear what happens with the dividend. You're probably going to miss, today you've already missed, a decent 5% gain, but you're probably going to buy this thing, I'm a really bad estimate, around, let's say, $4 or $5, depending what happens to the dividend. But I would just wait to see what they say about it. Because if they are like, oh, we're going to, we'll pay you the normal dividend, like the 15 cents, but we're going to continue to review it, I'd just hold off. I would not touch this thing. But, again, if you want a recovery play, like MPW has been this low before in 2009, the financial crisis, and managed to at least rebound to $10. Maybe the same thing happens, but none of us can tell the future. So that's it, guys. Have yourself a good night. Tell me what you think about medical properties, because I'm mixed on it. I'll be honest. I'm mixed. I wanted to YOLO into it originally, and now I kind of regret it because this would have been an easy 400 USD today if I actually did before earnings. But throwing my hands up, I didn't. I kept my portfolio. I'm kind of happy with the decision, and yeah, see y'all next time. Bye.